Welcome to the Financial Beast Podcast, the practice owner's guide to maximize practice value and create personal financial success. Your host, Eric Miller, is the co-owner and chief advisor at Econologics Financial Advisors. He is also a national speaker and published author in financial matters focused on practice owners at every phase of ownership.
Hello. This is Eric Miller, and welcome to the Financial Beast Podcast. As many of you know, this podcast is dedicated really towards those of you who had the bravery and courage to own your own business, own your own practice, especially those in the healthcare industry. I know exactly how difficult it is to not only be a good practitioner, but also to try to run your business and to make sure that you're running a business so that there's something left over for you, for your household. So, we're really here to try to give you as much information on how you can really harness the power of your business, harness the power of your practice, and make sure that you are seeing the financial rewards of that for your household. So today I'm going to talk about a interesting topic that always seems to come up because, we talk a lot about setting up or controlling money. Let's just start with there, like being able to control money. This is a big issue for a lot of business owners. And when you look at the magic money triangle, I'll call it, three really key skills that you must have if you're going to be any good at all with money. Number one, you got to know how to acquire it. Number two, you have to know how to expand it, but you also have to know how to control it. Now, there's a lot of business owners out there, especially in the healthcare industries, that know how to acquire money. You're good at marketing and promoting and seeing patients at a high volume and getting paid. And some of you are even good at expansion of money, making sure that you invest it wisely, real estate, expansion of your current practice. But the control of money is an area where we see a lot of deficiencies. And when I say deficiencies, I mean that, money comes in, where is it going? And, if you're not careful, if you don't pay attention to your money lines, then you will find that money will just go everywhere, kind of like a dam that bursts. Money has this strange characteristic of doing the same thing. So I want to show you guys today what we consider, number one, how to control money better. And this really goes part and parcel to setting up what we feel are the 5 most important accounts that you need to function in your business, but will benefit your household. And I say that because, look, all of you that own your own practice, own your own business, you do it because you, for whatever reason, you want to create expansion, you want to create financial freedom, you want to do all these things. But most of the time, it's just allowing you to barely get by. And that is because you don't have these accounts set up correctly. And as I go through these accounts, it's really based upon a couple of interesting principles that I observed as I was consulting, advising business owners really over the last 12 years. And it was really an interesting phenomenon that we finally figured out and said, okay, there's something here. But the naturally occurring realities that we see all the time amongst business owners as to why they tend to fail with money. And when I say fail, I don't even mean fail. I just mean that they're not getting what they should from the business. And this is manifested in so many different ways, but, it really comes down to, when I get a hold of a business owner and I start looking at his financials, the business seems to make enough to cover their basic operating expenses, and it provides just enough for them to pay for their household lifestyle, whatever that would be. But of course, that's not anywhere near what a business should provide. So when I first started, I started collecting profit and loss statements, started looking them over, cash flow reports. And, it just all seemed to match up, whether I was talking to a veterinarian, whether I was talking to an optometrist, whether I was talking to any kind of medical professional that owned their own practice. All these things seem to always line up. And it really came down to me figuring out, okay, there's really two basic realities that we're all operating on when it comes to your business and your finances. And that is, number one, your business is going to try to spend every dollar that it makes and then some. And I know that's a reality for a lot of you, but there is always going to be demands on your income, whether it's from staff, whether it's from vendors, whether it's from the tax man, whether it's from creditors, whoever it's from, there's always going to be a demand on your income from an outside source. And you know what? It doesn't matter whether your practice is doing 500,000 or your practice is doing 10 million. And I have clients that range from there. It doesn't really matter how much revenue that you're bringing in. That principle will continue if you allow it. Now, that's the bad news. The good news is that I have seen that your business will make what it thinks it needs to make to cover its most basic necessities. And this was really interesting because, of course, I would ask someone, what do you need to make in your practice? And they would always give me their make break number. And I was always fascinated, not what the number was. I didn't really care what the number was, is what they thought comprised their make break number. And it really came down to, I found that the reason that most owners weren't getting the full benefit out of their practice was because they were underestimating their make break number, meaning that they weren't accounting for certain quote unquote expenses that they should have, and making that part of their make break number. Because again, your business will make exactly what it thinks it needs to make to cover its most vital expenses. And when there isn't a demand on the business, it's not going to make it. People are wondering where money comes from. And I'll give you a very simple story to demonstrate this. I saw someone that I admired that made probably $3 or $4 million a year. This was probably about 8 to 10 years ago. And I went up to him and I was like, how is it that you make so much money? And he said, and I thought he was going to give me this detailed program of his marketing prowess or his sales prowess or whatever. But he just said this to me. He's like, because I need it. And I was like, whoa. Income comes from necessity. And the way that you build necessity is that you have to have a pool of money. All right. Just like any other expense. And I say that because when you have expenses, you guys will work to make sure that those expenses are covered, whether it's overhead expenses, whether it's payroll expenses, whether it's marketing expenses, whatever it is. You will find that your business, your group will make what it thinks it needs to make to cover these most basic expenses if it thinks that they are necessary for that group's survival. Okay. So what I found most practice owners were doing was underestimating what that number needed to be. And that's why you struggled to have to be able to pay your taxes, or you never felt like you had enough in reserves, or you never felt like you were able to get ahead, or you never felt like you were confident about expanding your practice, or you never felt like you had what you should have had from the business. And you wake up one day and you look at your profit and loss statements and it says, wow, it says that I made a profit of 200,000 or 300,000 or 500,000. Where's the money? Where does it go? It's not in my checking accounts. It's not in my savings accounts. It's not under my mattress. Where did it go? And that's exactly where it went. It got consumed somewhere in the business. Okay. Because You were not controlling the money correctly because you didn't have these 5 accounts set up. So that's really the background of what we're talking about today in these 5 basic accounts that every one of you should set up to help control your money and at the same time to build wealth. And that is obviously what we're talking about today, because for most of you, your business is your biggest investment. It's by far your biggest investment. And I want you guys to be able to utilize it, but it also needs to be able to create other income sources for you. But to do that, you have to get it flowing like the Mississippi. And to do that, you have to have the correct demand for how much your business needs to cover all of these quote unquote vital expenses. So we're going to start with that today, and we're going to get into these 5 accounts. So what is the first account that you must have set up? Okay, so this is, to me, the make break. When I say the make break, I'm saying maybe I'll come up with a better term than that. This is the most important account that you can possibly have. And this is something that we're going to call a wealth storage account. Now, look, all of you that own your own business, because I talk to you all the time, have the dream where you're one day not 100% reliant upon your business for all of your cash flow and income needs, right? Like, you don't want to be reliant upon one of anything. Okay. So, that's fine. But in order to create other income sources, how are you going to do that? Okay. If you want to buy real estate, if you want to invest, you have to have money to invest, unless you're just going to leverage everything, which I don't think you need to do. But if you're going to compound your money or put it in places where it can grow, then you're going to have to, and you want to accelerate this so it doesn't take 30 years to do, then you're going to need to make sure that the business is providing the base of money that can be then used to invest in other types of assets that can produce cash flow. So the first account that every business owner should set up is what we would call a wealth storage account. And the amount that of your business revenue that should be channeled into this account should be 10% of your gross revenue. So I'm going to say that again. 10% right off the top of your business revenue should be channeled into what's called a wealth storage account. That is, the beneficiary of that is your household. That money is not designed for household consumption. It is designed for household expansion. It is designed to create a pool of money for the benefit of the household that you can then invest in other income producing assets. And whether that's public securities, whether that's other businesses, whether that's real estate, whether that's life insurance products or annuities, whatever it is. Okay. And I can do a whole podcast on what that should be. That money is designed to create other income sources, but its primary source is coming from the business. Now, why do we say this? Like 10% right off the top of my business should be going to my household, Eric. My accountant's got to have like a hissy fit with this. This is taxable income. What are you doing to me? Okay. So we can talk about all the tax ramifications of that later on. Right now, I'm just trying to figure out that the business is operating on the correct income demand. And unless we have a pull of money out of the business into another account, you will never, ever have a surplus. You will never be able to create reserves. You're never going to do that. Only physically removing money from a business will allow you to ever create reserves. That's it. And a lot of people don't believe me when I say that, but it's the truth. Why? Because your business will try to spend everything that it makes and then some. So that's why we say you have to set up these accounts outside of your normal operating procedure before it's going to work. But account number 1 is your household wealth storage account. You set up a systematic every single week. Collections come into your business, okay? and 10% of that should go into that wealth storage account. Now, there's a whole method of doing this that I'll probably dig into in another podcast, but that's all you're trying to do. You're trying to make sure that that 10%, the first 10% of the practice revenue goes into that household wealth storage account. This is considered owner compensation. Okay. This is your pay as an owner of the business. You get your practitioner pay. You guys take a W-2 salary. Maybe you take draws out of the business. This is over and above that. This is for you as an owner. This is for all the risks that you took as an entrepreneur to get this thing established, to take all the risk, to deal with all the headaches and the BS. You know what I'm talking about? So that is what that account is for. Now, there is a method to start doing this, and I'm going to get into that as we go along. But 10% right off the top should go into that household wealth storage account. And again, it is for the creation of other investments. It is not for you to buy boats and bigger cars and bigger houses and all of those things. That's account number one, your household wealth storage account. Now, when I say it's an account that you set up, it may not be in the business, but the business needs to have that as a demand, meaning that it's expensed out every single week. Okay. And I would just do an automatic and systematic ACH from your business checking account to this household wealth storage account, which is just a separate account that you would set up at like some kind of financial institution. But it's outside of your business name. Okay. It's outside of your business. It is for the benefit of the household, which is the parent company. Okay. So that's account number one. Account number two is what we're going to call your business protection and liability account. And this is for those of you that didn't feel like you were prepared for either the pandemic or really any other kind of emergency, is because you don't have enough reserves in the business. And I know a lot of people tell you, well, you don't need reserves in the business and cash is trash. But I like to hear what those people say when your business is shut down and you can't make payroll. Okay, cash is king at that point in time. And I'm telling you right now, most of you are woefully unprepared when it comes to having enough in reserves. You should have at least 2 to 3 months of business expenses that can cover, your basic payrolls and, your basic expenses. You should have that in some kind of a business savings account. Okay. Now, this is an account that you can hold in the business. The ideal scene here is to have at least 2 to 3 months of business savings. So if your business is spending $100,000 a month on expenses, you should have $100,000, or you should have at least $200,000 in savings. That covers you not just from like natural disasters. What if you get sued for some reason? You got to pay attorney's fees. What if a regulatory body comes in and says you owe us, $50,000 for overbilling or something like that? You're going to have to pay them. Any other attacks this is what happens with a business. You will get attacked. So you have to have something to protect the business. Okay. Credit lines are great, but you need money. So have reserves to be able to do that. So this is account number two. I would probably, if you don't have this much in savings right now, I would probably peg 3% to 5% to go into this business protection and liability account. So we have 10% of your revenue going into your wealth storage account, 5% going into your business protection and liability account. Third is your tax account. Okay. Account number 3 is your tax account. Now, most of you that I'm talking to are S Corps, or you are LLCs taxed as S Corps. Either way, you are on the hook personally for the tax that is generated from the profit of the business. So your business earns profit. That profit translates onto your personal income tax return, and you owe the tax that's due on that. Okay, great. But the business is what needs to cover that. So you need to work with your CPA, work with your bookkeeper to make sure that you are staying on top of this. So you know that I am setting aside money that is going into a tax account that you can hold in your business or outside of your business. Most of you, I just say own it in your business. That would pay for your quarterly estimates. Okay. And you should have that reviewed every quarter especially if you're growing quickly, to make sure that you're setting aside enough to cover that. Now, in conjunction with that, you ought to be working with a tax planner that's trying to mitigate your taxes. So maybe you don't have to pay out as much. And if that's the case, then you're going to have a lot more money in that account. But the biggest issue that I have with a lot of you is that, at the end of the year, most of your CPAs are like, well, you owe $40,000, $50,000, $100,000, $200,000 in taxes. You're like, all right, where am I going to get it from? Okay. So make sure that you have a tax account set up so that you can use that too. You can use that money then to buy maybe some advanced strategies that would help minimize your tax liability, things that you can use to get bigger deductions for. But you're not going to have it if you don't set aside the money for it. So you need to make sure that you have a tax account that is set up. So that's account number 3. So how much should your percentage of your revenue should go in there? That's going to vary from person to person, but I would say probably 3 to 5% you should start with on your revenue that would go into that tax account. Okay. Account number 4 is a business expansion account. Okay. Now look, all of you need to really recognize that you need to reinvest back in your business. Whether it's good equipment, whether it's training on your people, whatever it is, things that are going to allow the group to work together better. You need to make sure that you're putting money towards that. Not only that, but what about when you want to hire another practitioner, or you want to hire an associate, or you want to hire or expand to another area? You're going to need money to do that. Okay. Now you can borrow your way to all these things, but you're still got to put down payments on, for, buildings or expansion projects or whatever it is. So you need to make sure that you have the cash there to do it. So a business expansion account, where I would probably anywhere between 3 and 5% of your revenue should go into that account. And again, it's used for build outs, remodels, down payments on a new building, an existing practice that comes for sale. Someone just wants to shut down. You got the cash right there. You can write them a check. All kinds of things that are going to make the business more valuable as an investment. That is the purpose of that expansion account. Okay. And again, 3 to 5% should be earmarked of the practice revenue that should go into that business expansion account. Now, the last account is more of a celebration account. I just made this account up because you know what? You got to celebrate. And I think 1% of your practice or your business revenue could go into a celebration account. You can celebrate, help people along the way that helped you, maybe a charity, staff party, whatever you want it to be. But, the money is set aside for some kind of a celebration. Okay. Now, if you're doing the math, 10% going in your wealth storage account, 5% going in your business liability and protection account, 5% going into your business expansion account, 5% going into your tax account, 1% going to your celebration account. What is that? 5, 10, 50. That's almost like 26% of my revenue going into all these different accounts. I'm like, yes. And you're like, Eric, there's no way I can do that right now. And the answer is, I know. Why? Because you don't view those accounts as necessities. And that's why you don't have it. So this is the rub. Okay. I know I just gave you a big problem because you're like, I can't afford to do what you're telling me to do. I would go insolvent. And the answer is, I know. Start on a gradient. Start with a small percentage, and then every 4 to 5 weeks, try to increase each one of those accounts until you get to the ideal target. It may take 6 months. It may take 8 months. But if you believe in these natural laws of organization and finance and money, what will happen is that the demand increases. Now, look, you also have to do some things in your business as well. Like money's just not going to show up because you're doing the same things over and over again. You got to create a necessity in the organization. You got to get the purpose of the organization. You got to make sure people are on board. You got to get rid of people that are, not on your team. You're going to have to market more. You're going to have to sell better. You're going to have to do things better in the business. But if you do these things and you have the account set up, doing those two things together will allow this metamorphosis happen. And in 6 to 8 months, your financial picture will look totally different. And it doesn't take forever. It is going to come with some growing pains, and it's going to come with some battle scars, and you may lose, some good people that you think were good people. And, you may piss off some, your accountants, and you may piss off some office managers, and you may do all this, but I am telling you, it is one of the most survival things that you can do for yourself, for your family, for your organization, because look what I just did. I not only put these profits in, quote unquote, as expenses, meaning that we're expensing them out, but they really are profits. But we also then, which is going to increase the value of the business right now, because your business value is going to be really based upon your profits. So I'm expensing these out. I'm showing you how to expense these things out so you can increase the value of your business. Not only that, you are finally harnessing the power of your business for the benefit of your household, so that you can accelerate the accumulation of other assets, so you're not dependent upon your practice for the rest of your life. My God, what did we just do here? I know it sounds crazy. I know it sounds like it's almost impossible to do, but I've got hundreds and hundreds of clients that are doing this exact system, and it works. Okay. It just works, because we're putting control of money in that you never had. And we're doing the most important thing, which is not underestimating what you actually need to live the life that you want to live. And that's really what I'm trying to do here. I want to make sure that for all the hard work, for all the effort that you're doing, that you guys get rewarded for that. Because I know a lot of you that own businesses are the last people to take paychecks. I know that you guys get all the time patients, staff saying, hey, you know what? You're only doing it for the money. All you care about is the money. And they don't see the $2 million that you owe to the bank. And they don't see the sleepless nights. And they don't see all the legal paperwork that you have to do every single year. They don't see all of that. Okay. And they don't need to. All right. You shouldn't be seeking approval from them. But at the end of the day, you need to build in a system that prevents the business from overwhelming you and running you. And this is, to me, one of the better ways that you can do it, because it really, it puts you in control of the business cash flow. And it does a lot of really good things that benefit you, your household. And not only that, but the staff as well, because now you're going to have money for them and expansion and bonuses and all that, because you're properly allocating this money, not only for you, but for the benefit of the business. So again, those are to recap, 5 most important accounts. Number 1 is your household wealth storage account. 10% of your business revenue should be allocated into that account. Number 2 is your business liability and protection account. That's for where your at least 2 to 3 months of savings should go. Let's say 5% of the revenue should be going in there. Your tax account, 3 to 5% of your revenue should be going in there. Your business expansion account, let's say 3 to 5% should be going in there. And then a celebration account, 1%. So it's a little over 20% of your money is expensed out into those accounts. And that is going to then allow you to have choices. It's going to give you freedom. It's going to make sure the business is operating in a solvent manner, so that when you go to sell it, someone else is going to see this and they're going to be like, wow, this thing is something that is run very well, and I'm going to pay you a premium for that. So that is the benefit of doing it. It really does solve a lot of problems. And I hope that you guys are listening to this will certainly, start implementing this. If you have any questions, you can certainly reach out to us. Our website's at econologicsfinancialadvisors.com. We have a YouTube channel called the Financial Beast channel, where I do videos on certain topics related to this. But we'll be back here again next week, and I'll have another, we'll have some gems of financial data that you guys can use, because really and truly what we want in a world of economic chaos, only the financial beasts survive. And all of you that want to become financial beasts, which we want all of you to, really need to make sure that you know that you are in charge of your own personal economy, and that no one else is in charge of it. And you have utter control of your outcome, no matter what governments or people on TV tell you. So I will see you next week. And until then, go get it and make sure that you guys are acting like financial beasts. See you then.
You have been listening to the Financial Beast podcast, where we talk about how to turn practice profits into personal financial wealth. For more information on how to become a financial beast and practice ownership, visit financialbeastpodcast.com. You may also want to call the office at 727-588-1540 to request more information on becoming a client or arrange to have Eric speak at your next event. That's 727-588-1540 or financialbeastpodcast.com.